All right, Don, let's talk about F2. Why don't we start with tell us a little bit about you, your background. Wind us all the way back to kind of earliest entrepreneurial moments.
Yeah, definitely. I was not an entrepreneur in training, or at least I didn't know it at the time, but I wanted to work in finance.
Mhm.
Like everyone from, my undergrad, I aspired to move to New York after graduation and work in investment banking and then join the buy side, working in private equity or in public markets. My whole former life was around building a track record to position me to break into private markets investing.
Mhm.
And it wasn't until I went through those roles, which are incredibly valuable in building a foundational skill set and understanding customers. It wasn't until I got to Stanford Business School where I found the world of entrepreneurship and I got the itch to start my own business. And
Was
take the
there
leap.
like a specific moment or more gradual when you got to school of like learning more about entrepreneurship?
I went to Stanford with the intent of going back to private equity.
Mhm.
I signed a return offer to go to Apollo on their buyout team. That was my dream job growing up for as long as I can remember, since the early days at Cornell.
Mhm.
Once I got the job and I was ecstatic about it, and I loved the team I was going to be joining, and I was really aligned with their approach to value-based investing. Once I had the job and I had some time to myself, it was the trough of COVID. So Stanford's campus was entirely shut down. I'm locked in a house off campus with a guy that is now, I didn't realize at the time, but was going to be soon become my co-founder.
Mhm.
And it was 2021. So the venture markets were ripping and entrepreneurship was in the air.
Yeah.
And it was a culmination of those factors and the fact that I'd kind of achieved what I went to Stanford to accomplish already, that I started to explore or ask myself, what else is out there? Like
Yeah.
what could be better than, my dream career path? And I started tinkering on some ideas that had been brewing in the background over the last, year of being on campus. And as I dug in, it was infectious.
Yeah.
And once you see entrepreneurship, once you have the idea, and that's in your seat, talking to meeting with founders all day. Like once you have the idea and the vision, and it starts coming together, and you can't sleep at night, that's when you have to kind of rip up everything you thought you knew and take the leap head first. And that was the entrepreneurial aha moment for me. Just laying awake at night, unable to think about anything else besides the kernel of idea that I had and wanted to pursue it fully.
What was that initial kernel of idea? I know when people start their entrepreneurial journey, there's a lot of stuff that gets thrown at the wall.
The world has evolved a lot since 2021 when I
Yeah.
started my first company. But at the time, it was revenue-based financing.
Mhm.
I saw an opportunity to apply my passion for finance to Silicon Valley and technology. And this new asset class was starting to emerge called revenue-based financing, where you could help companies effectively pull forward future revenue and give it to them today up front, so they could fund their operations based on future revenue.
Yeah.
Software businesses, particularly enterprise, tend to get paid up front, or in many of them in the mid-market and in SMB land, get paid over time, basically pull forward cash flows from future revenue streams, give it to customers today so they can fund their growth without taking any dilution, selling equity in their business.
And largely this lending was done kind of haphazardly or in a very fragmented set, or not for the software ecosystem specifically.
So there was an emerging, private credit asset class in the lower middle market for technology companies at the time, was another factor, but it was very fragmented.
Mhm.
Most of the founders in my network, when I started the first business, they didn't know there was alternatives to raising equity, to selling ownership to
Right.
fund their growth, and banks wouldn't lend to them because they were not very profitable or typically not cash flowing.
Yeah.
And so they had limited access to the debt capital markets, or they weren't even aware it existed.
Yep.
And so I innovated a financial product to fill that gap in the market, working with the underserved lower middle market, typically bootstrap software companies, to provide them with alternatives to taking very expensive equity dilution.
Mhm.
And that was the product I built. And then distribution came through the digital front end
Mhm.
and infrastructure we built to make that capital more accessible.
Mhm.
So it was making non-dilutive growth capital accessible to the lower middle market at scale through software.
And a lot of that was that, marrying some of the experience you had in your prior roles in banking and in private equity, the operational rigor, the underwriting skill set, but bringing that with a distribution front end of building a technology business. Like, talk to me about how you both brought your own expertise, but also presumably learned along the way.
Yeah, absolutely. So I worked in management consulting at BCG, where to start my career after graduating from Cornell, I got a taste of business operations and business strategy, a taste. I then went to the buy side and worked in private equity, where I got to think like an investor, think about building and investing in businesses to make a return on your invested capital. But when building out operating models as a private equity associate, you need to intimately understand the business drivers, the nuts and bolts of what make a business a good business. And then you need to think like an investor, okay, what levers can we pull? How can we finance this transaction in order to generate a return for our LPs? And so you really get a comprehensive understanding of the building blocks of what makes a good business, a sustainable business, and what investors are looking for when deploying capital against that business. And so you get a pretty rounded perspective in that seat, particularly when it's complemented with the consulting background. That perspective unlocked this first idea for me at ARC. I had the finance and investing skill set to build out our underwriting model manually in Excel, the same way I did in my private equity days. And I had there's no training for being a founder CEO, particularly for your first company. Like,
just got to do it.
No experience can set you up for that. You really have to learn as you go and make tons of mistakes and quickly learn from them. But my set of experiences was helpful in getting there. The MBA, the consulting background, and establishing frameworks that could help us get off the ground. But yeah, it was the finance skill set that allowed me to build the underwriting model, which we eventually automated with a rules-based underwriting system in the pre-AI era. And then it was kind of the other complementary skill sets that helped me go 0 to 1 on the business building side.
Yeah, and then let's maybe talk about, there's a pre-AI era.
Yeah,
ChatGPT comes out November 30th, 2022. What was that transition also from building ARC to seeing ChatGPT come out to now building F2? Talk to us a little bit about that.
Definitely.
As well as tell us what is F2?
Definitely. So I learned two things in those early days as a lower middle market private credit fund. That's effectively what I built out of the gate from out of my Stanford dorm room. Was a private credit strategy, direct lending strategy with a software front end and some rules-based underwriting.
And what was your source of capital?
I raised debt capital. So I ran an RFP. I went out to 50 private credit funds. I got 10 term sheets from private credit investors. They gave me capital.
Yeah.
I sliced it up into smaller bits and served an underserved part of the market with software.
Yeah.
Software-based lending. I learned two things. One, direct lending, balance sheet lending is not conducive to building a venture scale business. You end up allocating your capital, my equity dollars that I would raise, towards building out an underwriting team and a collections and risk team, an origination strategy, rather than investing in software and building technology, which is what I was more passionate about. And so, so one is building a capital intensive direct lending model was not, in my mind, and continues to be, not conducive to a venture scale business. And then the second is that pre-AI, rules-based underwriting really pigeonholes you down market. You're beholden to, for anyone that works in fintech, you understand what I'm talking about. You're beholden to these third-party vendors like Plaid and Finicity and Teller and QBO. We have API integrations that are finicky and they break, and it's really hard to underwrite businesses. And when you can, it's typically the smallest companies that are built on these systems or conducive to using these tools. And so the model breaks when you try to move up market. But then the higher credit quality businesses and most of the volume in the market is much further up than SMB land. And so pre-AI, it was almost impossible to kind of move up. So I did two things. One, I shut down the direct lending strategy and I built a two-sided debt marketplace that eliminated the capital intensity of my business. So I started onboarding dozens, eventually hundreds of private credit funds all the way up to the upper middle market and kind of mega fund stage to be participants in my marketplace without me taking any balance sheet risk. So that I could start building software rather than underwriting and funding deals, but to actually place debt between a borrower and a lender in the marketplace. Two is the advent of generative AI. That unlocked that unlocked the scale opportunity for me at Arc. And so I started organically developing AI to ingest loan applications from borrowers and place them in the lender network with private credit funds.
Mm-hmm.
What happened, to make a long story short, is over the course of a couple of years, so from late 22, early 23 through early 25, the tech got really good and volume spiked. Arc's debt marketplace business went from tens of millions of volume to tens of billions of volume over the course of a couple of years. The lenders were coming to me and saying, hey, we want your AI not just for the deal flow you're sending us, but for all of our deal flow. So not just Arc originations, but for our own proprietary deal flow. And that was the aha moment that said, I'm sitting on technology that should be more broadly commercialized outside of the confines of the Arc parent company. And that led to me starting my second business.
Yeah. How do you think about the workflows or jobs to be done within a private credit fund or a lender, right? Because you were sitting at the very top of the stack, the originations portion, but obviously there's tons of other pieces of work. And I'm just curious about how you think about that setup.
Yeah. Not to my surprise, nothing really changed between 10 years ago when I worked in private equity, kind of working late nights and long weekends in the bullpen, processing data rooms and iterating endlessly on investment committee memos, through present day, or up until maybe 6 months ago, where buy-side investors, including private credit, are running completely offline, manual, human processes, very inefficient processes for getting deals done. What does that entail? That's research and pre-screening through market research, benchmarks, comparable companies analysis, prospecting, so developing investment theses, through screening. So you get access to a sim, maybe a model from the sell side, and putting together your preliminary memo. You get thumbs up on the memo, and you go into a deeper, commercial due diligence process. You're kicking off multiple due diligence work streams, and then underwriting and structuring. So pricing and sizing risk for an investment. For the associate and VP, 80% of those workflows can today be automated or massively 10x augmented with purpose-built agentic AI.
Yeah.
So a lot of the menial, manual, human tasks that are clogging up very high leverage deal team bandwidth that today can be automated, freeing up that time to be reallocated towards applying human judgment to deploy more capital and scale AUM more efficiently without scaling resources commensurately.
Yeah. And so talk to us more about F2. How does F2 fit into that problem space today?
Yeah. So I had this aha moment while I was at Arc, and Arc's really good at startup banking and debt capital markets for startups, serving the startup community. And this technology I'd started to develop within Arc wasn't able to therefore kind of live its full potential. And so I went to the board and said, hey, it's time I start my second company, F2. There's a ton of pull from the market for this, but it's too distracting and operationally intensive for Arc to do under the same roof. And so my investors were incredibly supportive. 50 of them piled in and backed me on F2. And the platform is purpose-built AI for private markets investors.
Yep.
We're not working with VCs. The ACV is too small, but
and we're also terrible customers.
No,
customers.
I'm just kidding. We do have some venture guys in there, but we're focused on private credit, which is my roots. I understand the workflows intimately well. I've built an incredible network in the private credit space.
Right.
It's a small community. They're fundamentally oriented investors, meaning they can't tolerate hallucinations from general purpose tools like the foundation models, and so they need a vertical purpose-built solution for private markets that doesn't hallucinate, where everything's auditable and that speaks directly to the workflows. And that's what we've built at F2. We're getting pulled into commercial lending and we're getting pulled into private equity. So we're dipping our toes in these other two markets where they're analyzing data rooms, producing investment committee materials, and then monitoring those transactions post-close. And that's really the focus of F2 today.
I got a ton of questions, but how do you think about like the scaffolding? So I always talk about what people are building in the market today are different versions. People call it different things. People call it systems of action. People call it LLM powered operating or based operating systems. Some people even go as far as saying, hey, we want to build a full stack AI native company regardless of how people want to go after the opportunity, you're putting scaffolding around the models. You're making sure that the models get to, zero hallucinations ideally, or being able to make sure that out of the box, the kind of responses that a model gives is accurate for the end consumer. So I'm just curious, as someone who's on the front lines, what you and your team have learned about building up that scaffolding. How do you think about using off-the-shelf resources that are being built, or how do you think about pushing your team to kind of innovate on the frontier?
What we've built is an LLM-agnostic agentic system, purpose-built for the private market investing use case. What that means is, as the LLMs get better, our product gets better. What that means is our customers don't need to marry themselves to one vendor like ChatGPT Enterprise and risk that Gemini 3 comes out and surpasses ChatGPT 5.2 pretty much across the board. Or that, Anthropic Opus 4.6, comes out and then leapfrogs Gemini 3. When there's new model improvements, we can change the wires, create some new tools, and make our platform an order of magnitude better. And then your customized user experience remains intact and the same. The workflows you've developed, the adoption you've realized in the platform, it only becomes better. And so LLM agnostic is really important for the enterprise, particularly in finance. Not having to marry yourself to one vendor and try to pick a winner in the AI arms race, the foundation level. The secret sauce comes down to the tools we've built for the LLMs. Mm-hmm. And without going into too much of the details, we've built proprietary software that allows our agentic system to do things that the LLMs simply cannot do on their own, mm-hmm. and that no other application in the market has managed to crack. And why is that? Or how is that possible? In my mind, it's because we developed this technology organically for our own use case within Arc.
Yeah.
I developed this software first to ingest thousands of middle market private company data rooms and then place those in a debt marketplace. And we did that over the course of many years. And because we weren't trying to build a RAG tool for the enterprise and go get funded by, a VC off of, growth in technology that was available at the time. So we weren't trying to monetize that product in market at the time. I got to attack the hardest engineering problems first because it was for my own operational use case.
Mm-hmm.
Once we perfected that core agentic system, we built the suite of tools that make the LLMs do what they're supposed to do for our users. That's when I had the aha moment that, hey, this is going to be massive, mm-hmm. and it needs to have a life of its own. I need to commercialize this technology to solve a major pain point that I've experienced myself in my prior life, and that thousands of private market investors are experiencing, every day in their day-to-day job.
How do you think about the competitive dynamics in this space? You mentioned you guys are focused on private credit, getting pulled into commercial banks, I think, or commercial lending, and then private equity as another part of the opportunity set. There's lots of people playing in this industry. The companies that come to mind are like Rogo or Hebbia. They may be focused on a different part of the workflow, but I'm curious from your standpoint how you think about driving differentiation.
Yeah. Tons of respect for the Rogo team. I love what they're doing in the investment banking space. And that's definitely a company that I admire. Fundamentally different from my product, both functionally and on vertical application. I don't believe I have competitors, candidly. All of our customers are switching from completely offline human workflows, unless you count Microsoft Suite as technology. But like they're switching from iterating over Outlook emails on V150 of an IC memo to an AI native solution that's purpose-built for their use case. Yeah. And by the way, they have a mandate from the top of the fund to find AI efficiencies across their deal investment lifecycle. And so there's top-down push to adopt AI and what is a very broken offline manual experience. And then the users, the analysts through the VP leveling, they're using AI every day in their personal lives. And so we're taking them.
They've got ChatGPT up on the side and they're running all their searches through.
Totally. And they're doing it, in a way that's not sanctioned by their employer. And then, by the way, ChatGPT doesn't work 90% of the time for doing any type of multi-step math or any type of pulling in any institutional knowledge.
Yeah.
So we're competing with human offline workflows that I spent the former part of my life doing and that are completely broken. I know that firsthand.
Yeah.
In terms of the AI competition, most of these funds are working with the foundation model. Directly.
Yeah.
And so either at the personal seat level, like everyone has a consumer sub to ChatGPT or Anthropic, typically ChatGPT. And then some of the funds have enterprise licenses with ChatGPT. They compare a vertical built solution like F2 relative to their ChatGPT instance, where they've tried to create custom GPTs, and it's night and day.
Yeah.
Down to the words we choose, down to the accuracy of the financial analysis, down to the institutional context you can pipe in from your repository of thousands of prior deals instantly, down to the FactSet API to run comparable companies analysis in natural language side by side with your precedent transactions from all the deals you've evaluated in the business services space over the last 5 years. Like that type of experience, having complete institutional context, enriching that with third-party data from a fact setter from the web, and then running very accurate financial analysis from a data room is not something the foundation models can do today. And my guess is something that they'll never be able to do in the future.
Where do you think all this is going? Do you think this is all going toward, hey, Apollo, making it up, Apollo has 1,000 deal professionals today, and if they want to 2x their AUM, they can keep it flat at 1,000 or reduce it to 750? Do you think it's about saying, hey, now Apollo, yes, you're focused on the mega biggest possible deals, but now you can bleed in more to the upper end of the middle market and start to compete more there? Like, I'm just curious how you think about this, high leverage opportunity ahead of us and where you anticipate value accruing.
I think that AI is going to catalyze a lot of productivity and GDP growth. Generally speaking, I think new industries will be created. I think businesses will thrive for the foreseeable future. I'm very bullish and optimistic on the future in this AI super cycle. Not surprising, I'm the CEO of an AI company, but we're hiring. My friends are hiring. The companies that we're working with are becoming more productive. There'll be some frictional dislocation in the labor markets, but many of those folks are going to retool and are going to find new jobs in new industries that we're not even able to talk about today because they don't exist yet. And so, generally speaking, I'm expecting very favorable tailwinds to the global, or at least call it the US economy, backed by growth in AI. What happens at the investor level? Let's talk about private credit specifically to start. This asset class has been ripping and outperforming pretty much any other asset class for a number of years now.
Yeah.
LPs have been allocating to private credit at an outsized clip because you can get a better risk-adjusted return. And there's a labor shortage as a result of this supply demand for the asset class within private credit specifically.
There's a labor shortage within the firm specifically, as in they can't hire enough?
Within private credit funds.
Got it.
So we're solving that labor shortage by making team members more efficient.
Yeah.
No one's getting fired in private credit, like unless you're an underperformer and you probably shouldn't be in the seat in the first place.
Mm-hmm.
But what is happening is the deal team members are becoming more efficient. And so what you will see is, to your point, you will see funds scaling AUM more efficiently without needing to scale or wanting to scale headcount.
Yeah.
Which in my mind comes a lot of benefits with too many, and I've experienced this in my own business building over the last 5 years, but when you have too many folks, you lose flexibility, you lose institutional knowledge when employees, or in this case, investment professionals churn, they take a bunch of prior context with them.
And relationships.
The AI retains all of that.
Yeah.
Like our AI will not churn. Yeah. And you will retain all of your institutional knowledge. And when you bring someone to backfill that seat from the human who left to go join Apollo from your fund, you retain all of the knowledge base that they built on the F2 platform. Yeah. And the AI only compounds and gets better over time.
Yeah. How do you think about, like, this is something I think about internally all the time. And I think there are, in venture, there's, a spectrum of viewpoints on here with, of how people think about the business model of AI over time. But a lot of what you're describing to me is that F2 is effectively another employee of any of these funds, or another coworker or an employee. People call it also, like, obviously, how we think about ChatGPT, we call it a co-pilot today. But when I think about it, it's kind of like saying, hey, it's less going to be like this software tool. It's going to maybe linearly scale ACVs, but reach some sort of ceiling over time to, hey, this will be the best coworker at Apollo, at Blue Owl, at KKR. And I'm just curious about how you even think about that positioning or how you communicate that into the market. Because I think that's where people are like, nah, I hear that and they're like, nah, we don't think that. And I think some people are like, no, that's where the world is going.
I was chatting with one of my investors, James Currier from NFX, just last week about this exact topic. And the analogy I used was in that conversation, we're building the Iron Man suit for the private markets investor.
Yeah.
We're taking the human, putting them in the Iron Man suit so they're 100 times
supercharging
more powerful.
Yeah.
Right? So they can accomplish 10 times more than they could as a human alone. And so what we're not doing is displacing them. We're building what we call a partially autonomous AI experience where the human is working directly with the agent to become 10 times more powerful. So they can be better, faster, stronger. They can deploy more capital with the same amount of resources. Very functionally at the product level, every member of the deal team has an F2 license. With that license comes a dedicated F2 agent that knows you as the investor. Your chats aren't available to your team or to your MD or to the investment committee. You're working with your agent to produce investment collateral. When it's ready, when it's polished, by you iteratively working with your agent on an investment committee memo, let's say, when you get to a state that you're comfortable with, that the human, you as the IP, signs off, says this is ready for bringing on my VP. You'll add the VP to your workspace, where then you can take the IC memo to the next level. The VP will leave comments, will make red lines, will work with their agent to make changes to the memo, and now it's ready for the MD. You bring the MD to the deal team, and then it's going to IC. You're doing this in-app, human iterating with agent, human working collaboratively with human, that human working iteratively with their agent to get to a final answer 10 times faster, but with better institutional context, completely at your fingertips. So the moral of the story is we're superpowering the human's role, and they're evolving from doing menial IC work, like parsing data room files and spreading financial stuff you and I did our whole lives, and evolving into system operator, managing the system to get to a better investment decision faster, supercharged by AI.
Yeah, I mean, it's a little bit of, this might be outlandish, but a little bit of what Cursor's doing for software engineers, right?
Totally.
Supercharging them.
That is the analogy I use with my customers exactly. Because the big feedback we get from the managing partners of these funds is, how are we going to train our team? They're not going to learn anything if they use F2.
Yeah.
All jokes aside, like the feedback I got today from a very large, $100 billion fund was, F2 is too good, and our associates aren't going to learn anything and aren't going to do any work.
Yeah.
And I said, that's equivalent to Google not letting their software engineers use an AI coding tool.
Yeah.
That's equivalent to me not allowing my engineers to use Cursor.
Yeah.
It's very similar to that, to the step function disruption that's happened in that market. It's going to happen with investment professionals, and it's going to happen very quickly.
Yeah. People have to evolve with the technology and the tools.
Totally.
Bring us under the hood a little bit. Where are things coming next? Without giving too many details, where do you get excited on the product roadmap when you think about 2026?
There's a lot to build. I want to build it all very quickly.
Yeah.
Fortunately, I have an incredibly strong engineering team that I've been working with for many years, and we're shipping fast. And it's a lean team that's completely AI native. I saw the big tech companies bragging about like 30% of their code written with AI. I think I'd be surprised if 95+% of our code is not written with AI.
Yeah.
The role of the engineer has evolved. And sorry to go back to your last question, but software engineering is not the same sport it was even a year ago. We only hire 10x engineers, and their role is to apply human judgment and critical thinking in problem solving, not write code. It's to manage the system. It's a long way of saying we're shipping a ton of product insanely fast.
Yeah.
We've done more in 6 months than it took me 4 years to do in my last company pre-AI. Where we're going, we've built out the number one technology in the market for financial analysis. I don't want to spoil a surprise because I have some news coming very soon, but we have the best Excel agent in the market, bar none, order of magnitude better than the foundation models and better than any other application in the market. So that core technology we've built powers our entire platform, which for a private markets investor that's living in unstructured, messy Excel docs that never look the same, that's P0.
Wow.
The first module we built is underwriting. So you go from research through screening, through due diligence, and underwriting and structuring. That's pre-funding workflows, getting a deal done, evaluating a net new investment opportunity.
Yeah. So SIM comes in, all that unstructured data. I push it to F2. F2 gives me here's the first pass.
Even pre-sim, you have a thesis on, healthcare services with 100 mil of revenue run rate. You can run benchmarks and comparable companies. You can do industry research. You can refine your thesis. Then the sim comes in. You get the model. You do your screen. Then you get the data room access with thousands of files. You crunch those and create your investment committee memo. You go to committee. You fund the deal.
Yep.
The deal gets funded. Now what? In the first few months of next year, we'll be releasing our next product module, which extends the surface area beyond pre-funding into post-funding workflows. And so that's portfolio monitoring.
Yep.
So we're working on a really exciting AI native application of portfolio monitoring in a way that's never been done before. You effectuate your underwrite and investment. Now you have an asset. You need to monitor that asset on a quarterly basis.
Yep.
Today, and in my prior life, you get a quarterly financial packet from the management team. It's like,
here you go.
Dump over the fence.
Yeah.
CFO to the deal team member, right? Who's literally going through board decks and broken management provided operating financials and pulling out numbers and updating some archaic system. Typically it's Excel. Sometimes it's some clunky legacy software product from a big tech company, won't name names, but it has no AI.
Yep. We
can automate 95% of that work today with agentic AI. I'm building the UI UX around it. Again, powered by the same core technology for my underwriting workflows. We're powering our AI native portfolio monitoring workflows. We're getting tons of pull from our existing customers from this. So we'll be delivering that in very short order here.
Yeah. What are you hearing from customers on the ground? Like, how are people going about the process of selecting tools?
The question today was night and day different from 12 months ago. So the market's continuing to evolve rapidly. 2024 through early 2025 was around experimentation, piloting, testing, kind of like one toe in the water. Back half of 2025 and going into 2020, Q1 of 2026, we're seeing even the largest and most credible funds go all in and adopt this technology. Alongside that, it has become more sophisticated buying processes. Most of the middle market and up funds have created some type of AI council or committee internally to evaluate tools. Many have hired an in-house CTO to evaluate tools. They'll run competitive RFP processes, which at F2 we love.
Yeah,
we love to.
They're putting out the bids. They're demonstrating their intent.
We want that. What we don't want is for a fund to just pick an AI vendor thinking they're all created equal.
Yeah.
Because they're not. And the tech is different. This isn't software. The actual core technology is a differentiating element in this market. And we love when our customers run competitive RFPs under NDA on live data, typically with a timer, a time box. And we'll run those tests the same way me and you used to interview for these finance roles in our prior lives.
Yeah. Let's transition a little bit. Let's talk about everything you've learned over the past 4 years, 5 years of building and being an entrepreneur. So if you wind back to 2021 versus what you know today and now, like what are kind of the core themes that you reflect on?
It's a big question.
We're gonna break it down.
I have learned a lot over the last 5 years. I have made an incredible number of mistakes. To tie back to a comment I made earlier in this discussion, those mistakes are not only important, but critical. The only way to learn to be an entrepreneur is to be an entrepreneur and to build and to fail.
Yeah.
Well, not to fail, but to make mistakes and to lose and to not give up. So being resilient and finding the fast moving waters, refusing to quit, but not in a stubborn way, like being willing to make change, staying malleable and nimble, and refusing to give up is I think, at least in my case, anecdotally, is what allowed me to persist over the last 5 years and evolve my business in a way that I found product market fit a few times over now. And that's been the most challenging part, but also the most rewarding part on the other side of finding adoption of your product in the market.
Yeah. Well, it's only over when you say it's over.
Totally.
Like that's one of the non-intuitive things about building a company. It's like, as long as you want to keep going, you can. keep going.
And you have to be willing to get punched in the face 1,000 times
Yeah.
in order to get there, and to just take it and roll with it and almost enjoy it in some kind of cynical way.
Yeah.
At this point, like you fail and it's like, okay, why did I fail? How do I fix that? How do I address that problem? And how do I do better next time?
Yeah.
Like that's how you learn and get better, and ultimately how you win.
What have you learned about generating momentum? I believe that early stage company building is a little bit about amassing mass, for lack of a better word, and getting this ball rolling first up the hill, but once it's at the top of the hill, that it can just go down as fast as possible. So I'm curious about what you've learned about making sure you have the early supporters around you, making sure your network knows what you're doing, making sure that when you are in those early kind of design or exploratory conversations that you have the practices in place or the intuition already in your head to say, okay, I heard this from this person and I need to do X, Y, Z things in a short enough period of time to make sure that they're excited about what I was telling them. Like, what have you learned about that? How do you think about momentum? Or even if you disagree with it, just curious about how you think about that process.
Yeah, no, it's important. A couple things. One, leading from the front lines. I always lead the team into battle from the front, right? And that's driving sales and product and hiring, like being there and leading by example for the team. Two is the people you surround yourself with. It's become over time, and maybe learning as well, learning from the first company and iterations of that company through present day. I'm doing things very differently this time, but surrounding yourself in the early days with people who believe in you as a leader, are bought into the mission and the vision of the business, and where you feel this sense of camaraderie and shared mission and desire to win, to be successful.
Yeah.
It's like, maybe it sounds stupid or trivial, but the reality is there's a lot of people you can interview and hire for these roles. You can get the man or woman with the best resume, the shiniest resume. You can go try to get like the flagship customer who's uncertain around whether they actually want to adopt AI. You can go find investors based on the flashiest logo. But what's most important is having people that have your back and are going to go into battle with you.
Yeah.
And that's investors, that's employees, and that's customers, especially in the early adoption phases here.
What have you learned about building relationships? I feel like one of the things that I didn't appreciate about entrepreneurship is how much of getting things done is reliant on not only knowing who to get in front of, but also having a relationship with the person to get in front of that actually matters. Like, what have you observed about that in the ecosystem?
Yeah. Relationships are everything. In this age of AI, it's almost like relationships are becoming increasingly important, where AI can automate and augment most of like what used to be, human driven tasks. What AI won't automate is the human to human relationship. My first business was SMB, lower middle market sales. Now I'm doing mid-market to enterprise sales. I've never learned the importance of relationships more than the present day. And it's exactly what you're describing. It's building rapport and buy-in across multiple stakeholders across an organization in order to ultimately win a contract.
Yeah.
No matter how good your tech is, it's important.
Someone's buying from someone else.
It's a human buying from a human. And there's a level of trust there. And so it's about building trust and rapport and relating to someone on the human level.
That made me think of an interesting sidebar question, but like, what does your average day look like right now? Like, there's a lot going on. I think you have 20 people on the team.
Yeah.
Are you in hiring mode? Are you in sales mode? Are you in product mode? Are you in all of the above mode? Like, you mentioned, offline that you're constantly kind of back and forth between New York and SF. Like, what does the average day look like for you?
So it's generally not doing podcasts, not these days anyway. Yeah. I'm sorry for having to, thank you for accommodating the schedule on this, but it's sales. It's a lot of sales. I spend a lot of time talking to decision makers of prospective and active clients.
Yeah.
I'm building this product for them.
Yeah.
I spend a lot of my time speaking with customers. I generally have 3 to 10 sales calls a day.
Yeah.
And I call them sales calls, but sometimes it's relationship building with the managing partner of a middle market private credit fund or private equity fund,
Yep.
and providing thought leadership on how AI is going to impact their business and what
Yep.
they're seeing in the markets, right? So talking to customers is probably 50% of my day. The rest is the other buckets you mentioned. The next biggest slug is going to be product.
Mhm.
So that's product vision and strategy. I don't have a PM at F2.
Yeah.
I'm the PM. I
Yeah.
work directly with our engineering team to drive product roadmap and implementation.
Yeah. So you hear, that's great, right? Like you hear feedback from the market, you ingest it, you understand, prioritize it in your head, and then communicate it
And
back out to the engineering team.
And I'll put together a PRD and with leveraging ChatGPT, I'll create a V0 to mock up a prototype.
Yep.
Then I have daily design sync with my engineering team, and we'll talk about what comes next, in what order, and what the trade-offs are in prioritization.
Yeah.
And so product and implementation is a big part. Thankfully, I have a best-in-class engineering team that makes that a very frictionless experience for me. And then it's hiring and team management. So yes, we have at least 10 open roles right now at the company.
Yeah.
Hiring software engineers has become incredibly challenging in this market, as many people have not adopted AI tools, and a smaller percentage have and are highly proficient. We call them 10X engineers. They're more like system operators. They're critical thinkers and problem solvers.
Yeah.
And so when you find one of those engineers that meets your bar, you go all in and make sure they become part of the company.
Yeah.
But it's kind of sifting through a lot of interviews and hiring processes.
Yeah.
Software eng, on the business side, I'm not hiring salespeople. I'm hiring finance people.
Yeah.
So I'm hiring folks who come from private credit and private equity and investment banking to actually sell the AI, to run live custom demos on your data and really bring to life and communicate the value prop of the product directly to our ICP.
Letting people see and touch and feel the product feels like the magic moment for this particular market.
There's been a lot of vaporware in
Yeah.
enterprise AI over the last year. And so we have to overcome that stigma. And I developed this go-to-market motion where the first thing we'll do is get under NDA with the firm, say, send us a data room, send us some illustrative investment committee memos from a different deal. We will AI templatize those IC memos and we'll run them against your net new data room. And then they'll compare and contrast to their human workflows. And that's the best way to prove out the product.
Yeah. And it's good because it's like, it'll qualify out people who aren't serious. If
Exactly.
like, I don't want to sign an NDA for whatever reason.
We just hold the other players in the market to the same standard, and
Yeah.
it'll sift through pretty quickly.
You talked about how you all are model agnostic. If you were a betting man, which one of the models would you say, hey, that's the horse I want to bet on? Or which provider has been most consistently impressive to you?
You're gonna get me in trouble with my partners here. We
can also skip it.
No. Look, I'm so fortunate, genuinely, to be building in this era where my partners are OpenAI, Anthropic, and Google, and they are pushing the bounds of the bleeding edge every day.
Mm-hmm.
They're making my life so much easier. Like they're driving they're making breakthrough after breakthrough possible for me and therefore for my customers, seemingly on a bi-weekly basis.
Yeah.
And so their normal course competition has created massive breakthroughs for F2 and for our customers in a way that was not fathomable 18 months ago. In terms of who's going to win the AI arms race, I could say very positive things and some areas for improvement across all three models that we're working with. Gemini 3 has proven to be an incredibly valuable model for certain applications, particularly the Banana Nano rollout has unlocked a new breakthrough that I can't speak to right now within a very important customer application our product will be releasing shortly. Anthropic, Claude, the Opus 4.5 model has been very helpful in completing certain analytical tasks when you provide the model with the right tools. And then ChatGPT 5.2 has been very impressive, particularly around reasoning. So the beauty of being an LLM agnostic system is that we can assign tasks to the model that's best equipped to that task at any given time. And that's going to change likely every other week for the next 24 months at a minimum.
Yeah. And two last questions. The first is something I love asking because one of the benefits I get in my job in doing the show is I get to meet a lot of fantastic entrepreneurs. And one of the things that I enjoy most about the tech ecosystem is there's this openness to giving back. So we already kind of asked about, what did you learn in your own experience about, hey, just sticking to it, being able to continuously run through walls and having that grit and perseverance. But if you were to get a net new entrepreneur, whether they're building in fintech or whether they're building in AI and whether they come from Cornell as an undergrad school or they were just getting out of the GSB, what would your main piece of advice be to them if they were looking to start a company in this environment? And that's my first question. And then my second question is, how can this audience that we're building here give back or support F2 in the journey? That's the second and final question.
There's never been a better time to build a company. I've built a company pre-AI. I launched my second company in the last 6 months. I launched one in 2021 in the ZERP environment, which arguably was great at the time, was meant to be a great time to start a business. And I've launched one now in the AI boom. It's easier to start a company, meaning there's more tools that are able to help you go from 0 to 1 faster and to iterate on ideas faster, to build software with fewer resources. But we're also on the precipice of a tectonic shift in customer behavior, both the consumer and enterprise level. And that opens tons of doors for entrepreneurs to come in and identify areas to deliver value to solve problems that previously were not able to be solved pre-AI. And there's 5 other ideas I want to pursue right now that I'm not, because I'm incredibly passionate about I'm building an F2, but there's never been a better time to start a business. And when you get that itch and you get to the point where you can't sleep at night because all you're thinking about is solving this problem, you just got to go all in and remove the safety net.
Yeah.
Call up your boss and quit your job and dive in head first, because that's really the only way to build a company. It's to commit 100% with no safety net, where failure isn't an option.
Yep.
And that's really the only way to build.
You got to burn the boats.
You got to burn the boats. I've done it a few times now, and I'm telling you, it's the only way.
Yeah. How did that feel? I've seen it, but I'm curious how that felt for you.
It was crazy. I'd worked my entire life. Anyone that's worked in finance, yourself included, how hard it is to get these jobs.
Yeah.
I worked my entire life to get this job at a top mega fund on the deal team, and calling up the managing, the senior partner and saying, "Thanks, but I'm going to go start my own business."
Yeah.
was insane to me. I would have never imagined doing that when I was an undergrad at Cornell.
Yeah.
On the other side of that, I felt an enormous amount of relief.
Yeah.
And I just knew that I was going to make this work no matter what and against all odds. And I've maintained that headspace ever since.
Yeah. This is where you need to be. And then the final question, what can the audience, the people who are listening, the people who are watching, what can they do for you? How can they be a part of the F2 journey? How can they help accelerate aspects of what you're doing?
Yeah. If you are a 10x engineer and you want to work at a hyper-growth AI native business that's solving an enormous problem for multi-trillion-dollar market, drop me a line and let's get in touch and see if you're a good fit for the team.
There we go. We love it. Don, thanks for coming on, man.
I appreciate you having me.
Yeah, of course.